Everyone says the real estate market is crashing, but how can that be if there's millions of families crammed into homes they can't afford? Let's talk about a couple big picture things. First, the U.S. is short 4.7 million homes. That is not an opinion, that is a statistical fact. And one of the things that people are also looking at now is inventory. If you watch any news media outlet, read any newspaper, the doom and gloomers are saying we have a ridiculous amount of inventory on the market. Well, let's look at that for a minute. Mid-2019, I challenge you to go back onto Google, Yahoo, any search engine, ChatGPT, and find an article where people were saying that the real estate inventory levels in mid-2019 were high, at a dangerous high, anything negative. I've done this and I've been able to find nothing. Fast forward to today, you see it all over. Every other article on real estate is inventory levels are through the roof. Inventory levels are through the roof. Also interest rates. We'll talk about that another time, but let's focus on inventory. Let's go with some hard statistics here. In mid-2019, which by all statistical measures, by any real estate expert at the time, was considered a normalized real estate market, at the time in the U.S. overall, there was 1.25 million properties on the market. That's how many properties were on the market at that time. Now, today, fast forwarding to mid-2025, there are 1.1 million properties on the market. Now, this is very interesting, and we want to look on this for a minute. I'm not a big component of national housing averages, but since we're looking at things on the national overall for real estate, and it's being discussed in the media, so I thought this was important. If there was this big housing oversupply in 2019, why are we not able to find any articles on it? Well, because there was a point of reference that no one was looking at. That was an absolute normalized market that no one can argue. But the market levels, the inventory levels dropped so much during the pandemic, to levels we've never seen. It got as low as about 539,000 homes, which is just too few. Remember, we're still 4.7 million homes short. So it went so low and then it came back to more normalized level. People are grading it on how much has come back, but they don't look at the long term. Let's again look back over the last 6 years. Again, go back before the pandemic, any of the craziness, and that housing market had another 140,000 homes on the market than we do today. This should tell you something. Again, the media has always steered me wrong in my real estate directions because whatever they get a hold of, they're going to exploit, they're going to amplify and try to get an agenda set. I don't know exactly what the agenda is this time, but I can tell you the stats show the housing market is still short 4.7 million homes. And as you know, watching my videos before, the majority of that is in the affordable housing sector. That's where the biggest pool of buyers are and the biggest shortage of inventory is. And overall inventory levels right now are at 1.1 million houses compared to 1.25 million or 1.24 million just in 2019, 140,000 homes less. So the issue is not inventory. The issue goes into interest rates, which we'll talk about in a minute. And ranked in with this affordability issue, those interest rates I was talking about, right now, 8.1 million families are doubling up with non-relatives because they can't find affordable homes. And when you look at that, that's not a crash, that's a crisis. Florida builders are not facing a slowdown, they're staring at an opportunity. And that demand hasn't disappeared. It's been stuck behind affordability and inventory constraints. That's why I keep repeating myself over and over about the affordable markets. Again, during the pandemic, when builders can make bigger spreads, the national home builders were coming in and building more luxury homes priced twice the amount of the average home for the area, above the median value for the area. Those homes, again, are not in high demand. There's a smaller pool of buyers. The interest rates have a bigger effect on them. So where the largest pool of buyers is right now and needing that affordability is the affordable housing. And that inventory has had extreme constraints. It just hasn't been built. There were a few builders like us focusing on those types of houses. And now they're the only types of houses that are really showing movement. They're showing stability and they're even showing growth. So today, Florida builders are not facing a slowdown. They're actually staring at an opportunity. And that demand that we're hearing about disappearing, it hasn't disappeared. It's still there, but it's stuck in a single niche around affordability and inventory constraints caused by it. So what type of property is this? The affordable markets. The properties priced at the median or below, where the largest pool of buyers are actually able to afford to live, whether they're renting or buying it and being able to get a mortgage. Those emotional homes priced twice the amount above the average market price for a home, the average median value. Man, those homes are sitting right now. And with the higher interest rates, that really ups the payment. And it takes a lot of people out of the buying equation to be able to actually afford those homes. And for investors holding those homes, well, we know that they were investing for appreciation only with negative cash flow. That's a very dangerous situation to be in. Some people bought 5, 10 of these, and now all of those homes are bleeding. The values have gone down. That puts you in a difficult situation. As an investor, you want to be in the more affordable homes that have shown to appreciate in the good times and then to hold value strongest during the unknown and down times. And also, they cash flow. Even when the market is having different fluctuations, it's putting money in your pocket and stake instead of taking it out of your pocket. That's what the affordable markets do. And that's where the demand is right now. All these people that are doubled up in their homes, they need the affordable homes in order to get their own homes. So builders are not being forced, but they are being absolutely shown the light that if you want to continue to build, you want to actually add to the solution, not to the problem, you need to change your ways and start building the affordable homes that are normally ignored. Now, sadly, we're seeing a lot of builders not take this route and they're actually going under and out of business. But builders like us have been embracing it for the last 10 years, and we see a runway literally that is unstoppable and with no end over the next 10 years because of population trends that we're seeing for the U.S. overall and this housing shortage. You can see how quickly we're able to start to make up for the needs. We're not even getting close to those estimate amounts that we need in the housing overall. And again, the largest sector of that is in the affordable, where most people, actually builders, don't want to build. So let's get back to interest rates. People are saying that interest rates killed the housing market. But if that was true, then why are over 8 million families sharing homes right now? The real threat isn't interest rates. That does play a part in it, but it's not the overall picture. It's the underbuilding of affordable homes. And builders who step up now won't just survive, they will lead, they will thrive, because you're answering the call that so many people have been making and not answering. So remember, if you're looking at this from wanting to live in a home that you can actually afford without another family living with you, a rental property that can, actually put money in your pocket and have long-term fundamentals of growth and prosperity and wealth, or you're a builder wanting to get into the right type of markets, it is very important to take emotion out of it, segment the market, and do your numbers. You'll see the statistics of which areas of the market have an undersupply of properties and which one have an oversupply. It's always a concern of mine when people say, first of all, we have way too much inventory, which we showed in the beginning we do not, but also look at the segments. Are there properties priced right at the median or 10, 20% below the median that have a large surplus of inventory? Usually not. But if you go again to twice the amount of the median price for an area, usually so. So you have to segment the markets. You have to know the statistics of how many and where you're trying to buy. Will there be a lot of properties or an undersupply of properties? Also, will it put money in your pocket or take money out of your pocket if you're an investor? Or if you're a renter, will you be able to afford the rent or not afford the rent? This is absolutely crucial, and this should be what the North Star is for building initiatives. That's why we are focusing solely on the affordable workforce housing. We see the shortage. We know that there is going to be a problem even worse in months to come when the COVID inventory is done, which I've talked about in several different videos. So I encourage you, take emotion out of it. You want to remove the roadblocks. One of the first things that you can do is find an area with growth, find an area where there is affordable housing being built, and try to get great incentives. As an investor, also as a buyer renter, you want to see where can you live in a nice new property that's safe with low crime, and also the rents are something you can afford on your monthly salary. So if you're a builder, this is your moment. There is a call to action that is being made by some of us to answer the call on these properties that are overlooked, not built, and now with people like us building them, there is a huge landslide of opportunity for everyone involved. And if you're a policymaker, please remove the roadblock. Do not put a lot of restrictions and red tape around builders. that are unnecessary. And this has nothing to do with environmental. This has to do with overbloat of bureaucracy in many of the areas. So please remove the roadblocks so we can solve this issue. And if you're a buyer, again, an investor, I wouldn't wait for this crash to come, because when there's an undersupply on this affordable housing, then you're really, really going to be waiting a long time. Now, if you want to get into the emotional markets, like I talked about, that's up to you. Negative cash flow, not where I chose to be an investor or a builder, but that's your own choice. So look at the statistics. Find out what is going to work for you. Find the areas where there's growth. Find out where there's a shortage of affordable housing, which are most of the high growth areas that I've talked about. And don't wait. The crash isn't coming on affordable housing, but you can start to put money onto your pocket just by following this.